Hello. Hi everyone. Sorry for the delay. There was some technical issues, so I couldn't put the live video directly into the event that we have previously set. So we did a workaround, and now we are just going on a straight out live video. So hopefully people are still with us, right? If you can hear me, please let me know. All right, thanks for the patience. Thank you for the patience. Let's see. Yeah, we'll let people slowly trickle in. Hopefully still got people with me. So it's just me for today, as Elizabeth is not feeling well, right? So it's going to be my first time doing it alone, and then because of the technical issues, so a bit ganchiong. So bear with me, right? Hopefully still got people coming, right? Let me just post it on my page. If not, I'm still just gonna go through what I was intending to go through. So hopefully, right, we have 3 people inside. So please like and share whoever is inside. And also please let me know if you can hear me, or if you cannot hear me, let me know. Okay, right. Already late, so don't want to hold you back anymore. Let me get started. Okay. So today's topic, right? Cooling measures. Right. What may be the potential cooling measures, right? Perhaps, right, one of the biggest discussion topics anyone, right, with a remote interest in property are looking back, are asking at this point in time, right? What potential measures may there be? How may it affect you? And why did it change the Singapore real estate market? And of course, when will the cooling measures come, right? So let's talk about it today. But before we get started, like how we usually start, right? Because it's been a month since we last met. What are some of the interesting news articles that we feel will there are some learning points, and there are some points with which we can discuss. So this one was from yesterday, right? The most recent GLS for Favour Park, right, was awarded to CDL and MCL. The details of the article that stand out to me, right? Number one, the PSF per plot ratio that was transacted at 1,129 PSF per plot ratio, with an expected sale price of about 1,008 to 2,000, depending on which analyst you refer to. While that may seem like a expensive price, right? Of course, it's quite hard to say 1,008, 2,000 PSF is not. It is cheap, it's not cheap. But right, if we do look at the per square feet of the land that was sold nearby, right? Today's Uptown at Fairer, that was transacted almost 4 years back at 1,000 PSF per plot ratio. So that represents just a 12.9% premium over that plot previously. Based on what we usually know, right? When plots are sold from a previous cycle and in a new cycle, easily, right, the prices should jump about 20%, right? But we are just looking at a 12.9% premium today, which is not a lot, right, in my opinion. Also, we only see 10 bidders, right? So for those of you who follow us, right, that is one of the factors that we do look at, right? How many bidders in a GLS, right? So it's significantly lesser than the Tanah Merah site at 15 bidders, right? And a lot lesser than the highest number of bidders for one of the last plots from the previous batch, right? Today's Daintree Residences, which attracted 24 bidders. So 24 bidders versus today's 10 bidders, significant difference. So which, right, all this plays a part in what we want to talk about later, cooling measures, right? So another thing we notice is that it is awarded to a joint venture between CDL and MCL. Yeah, so CDR is a really big group, MCL on their own, both really big developers. But why they joint venture to bid for a land? I think it's a trend that we will see more and more as we move forward, because I think the developers are being smart about this with all the cooling measures in place, weighing the developers down. They want to hedge out their risk. They want to be able to bid for more plots, go for more opportunities when they do come up. So they are doing like joint ventures so that they can spread out their risk and everything, which is, I feel, a really smart move. Right, next. And of course, I think this is the big one that we are talking about. The Q1 private property price index, right, jumped 3.3%, which is more than the URA flash estimates for Q1, right? The URA flash estimates that was released sometime in Feb, I think, Feb or March, right, predicted it to be 2.9, but in actual fact it came up to 3.3, right? So which has that whole conversation now will cooling measures come, right? And then since we are on this topic, right, I bring you to one part of that article talking about how landed prices have increased 6.7%, right? One of the biggest jumps, and contributing to that biggest this 3.3% increase, 6.7% from contributed by the landed segment. Remember one of the videos that we did earlier this year talking about opportunities in 2021? We did pick up that landed was poised to outperform in 2021. So just to boast a little bit but anyway, if you want to understand what are the other opportunities that we predicted that may potentially come true, because our landed prediction came true, right, go and watch our particular video, right, on the right moves predictions for 2021. Then next part, right, which also came from that same article, right, talking about resale volumes, how resale volumes are picking up, right. You notice resale contributed half of the private property transactions, which is quite a bit different from, let's say, if the data you see perhaps just 1 or 2 quarters back, whereby the bulk of the transactions were contributed by new launches. So I think this little snippet, right, there's a lot that we can take out from this trend, which will help us understand how the market works, right? So a lot of people, they ask, new launch price so high, are you sure can make money, right? And if everybody buy new launches, then who buy resale? The truth is, demand for new launches will always be high, right? Because people like new and shiny things. But how the market works and how the market remains sustainable is the cyclical nature of demand. So what I mean by that, when price gap between new launch and resale is relatively narrow, right, people tend to go for new launches instead, right? And also because new launch at that point in time, there are a lot of choices. So people will always pick the new ones, right, most of the time. But as supply for new developments drop, and as developers raise the price, right, or very simply, right, the cheaper units of these new launches gets sold, buyers have no choice but to move into the resale market. Yeah, then the resale owners, right, they look at two things. Suddenly got a lot more viewings, and then number two, they read the newspapers and they see articles like that, right? What would they do? Right, they will increase their price. So which is what we see today. Okay, right, so next up, right, let's talk about the topic for today, the cooling measure. So how we always like to explain stuff to our listeners, right, to our followers, right, we give you a little bit of history, what has happened in the past and what is happening today and what will potentially happen in the future, right? So we learn from what happened in the past to try to predict what's going to happen in the future, something that we always talk about and something that we always do. So today, let's talk about a bit of a storytelling, right, about the history of cooling measures, right? So a lot of us, we remember cooling measures from 2013, we remember cooling measures from 2018, but the fact is actually cooling measures have been around for the longest time, right? We see one of the first cooling measures coming out in 1996, right? Before the Asian financial crisis, right? So in 1996, they already introduced loan to value, they introduced, that was where they first started to introduce buyer's stamp duty, right? That's also where they introduced seller's stamp duty. They took it out a couple of years later to help prop up prices, but cooling measures are nothing new to the market. Also on this chart, right, it goes, the red dots are cooling measures, the green dots are either reversal of cooling measures or pumping out of supply to help prop up property prices, right? And then of course the blue line are the trends of the property price index. So what you can see here is quite clear. Every time the property price shoots up, the government use cooling measures to try to bring prices down. But the more interesting thing to note is that when prices drop, the government also have the habit of reversing cooling measures or pumping up supply to help prop up prices, right? There's a lot of things that we can learn from this particular chart lah. So one of the fun facts, right, is that Singapore used to have capital gains tax, right? It was introduced in 1996, right? But they actually took it out in about 2002 when they were 2001 when they wanted to prop up the property price post the 2000.com crash, right? So yes, so I mean this whole cooling measure thing is, if we look at what happened last year in COVID, right? The fact that the government did not need to do anything such as reversing the cooling measures like what we saw in previous crises with the green dots, it goes to show how the market has matured over the years, right? And how the demand has now shifted from extremely speculative demand before 2013 with the huge ups and downs to more organic demand in the market at this point in time, which is why the market goes up and down in a much smaller range today. Yeah. So still on history, right? I want to show what's been happening in the 2018 cooling measures. Yeah. So preceding the July 2018 cooling measures, the market picked up, right, property price index 8.3%, and that resulted in the July 2018 cooling measures. And then what comes after that is 2 consecutive quarters of downward movements, totaling just negative 0.7% before the market shot up again in 2019 second quarter, 1.5%. So, but what a lot of people don't know about the 2018 cooling measures, so everybody was complaining how LTV was dropped. Basically, everything was shifted by 5%, right? ABSD up by 5, LTV dropped by 5. But what a lot of people don't know was the main people that were hit by the 2018 cooling measures. I circled that in red, right? Is the developers. You saw how most of us affected by 5%, but the developers were punished double, right? Their ABSD before 2018 was 15%, right? After 2018, total 30%, so double for them, right? So who's the most scared? Who was the most affected by the July 2018 cooling measures? The developers, right? Who gains the most? The government lah, right? More income. But also yourselves, because you are listening in to us today, and you'll be in for a treat because I'm going to share how we can use the cooling measures, right, to our advantage, right? For those of you who can to make use of the cooling measures, knowledge about these cooling measures to your benefit. Yeah. So, oh yes, right, since we are on this, for those of you who are joining us, listening in, right, please help me like and share, right, to help reach out. Because of the technical difficulty we experienced earlier, the attendance is a lot less. I think the people that were prepared to come in probably thought it was postponed. Please do help me like and share to help reach out to more people. And for the sake of those listening in as a recording, right, if you find this info useful for you, please do like and subscribe as you help out the algorithm a lot. Yeah, right, without further ado, let's continue. So why didn't the prices drop after the last cooling measure, right? It's a very simple thing. The market has gotten used to cooling measures. Yeah, previously, right, why the prices dropped significantly after the 2013 cooling measures was because TDSR, total debt servicing ratio, ABSD, all of that was brand new to the market. It was a shock to the market, right? Nobody know how is that gonna affect them? How is that gonna affect the market? So the market took quite a few years to get used to that cooling measure. And also, is during that market, everybody was thinking that it's going to be temporary. So everybody just wait, hoping that the measures will be taken up, right? I guess very little of you in the market right now will be thinking the measures will be taken out, right? Because we are all thinking when the new measures will come in versus when the previous measures will be taken out. But just 5 years ago to 10 years ago, right, the main discussion was when will the measures be lifted. So the market has gotten used to cooling measures, right? So they are not surprised, right? So with new measures being introduced, right, everybody just took a step back, right? Prices didn't really drop a lot. People just take a step back. Let's wait and see. But they came back onto the market very, very quickly, as you can see. Within 2 quarters, they are back in the market. And also why the prices didn't drop a lot, because primarily the measures was targeted at the developers to stop them from going crazy in the en bloc market. So what did we learn from what happened in the 2018 cooling measures, right? How the price have moved. It goes to show the strong underlying demand of the market, right? After the 2013 cooling measures, it basically stripped up all speculative demand from the market. So post 2013, most of the demand is driven by organic underlying demand from upgraders, from local investors. Because of things like SSD, ABSD, it's close to impossible to make a quick flip on property nowadays, right? And that goes to stabilize the market, increase stability in the property market. Yeah, so the property market, so which is why come COVID, right, you saw that the prices never really dropped. So, and what a lot of us probably also unaware of is the slew of hidden cooling measures. So what I mean by hidden, right? They aren't exactly publicized as cooling measures, right? Because they are targeted at very specific groups of people rather than being hit across the board for people, right? So number one, right, the banning of reissuance of options in September 2020, right? Not many of you would have heard of it unless you are looking to buy a new launch, right? So summary of what this cooling measure did was that prior to this, a lot of the developers was like telling, okay, upgraders, right, you want to buy a property first? Can, right? You put down a deposit, I book the unit for you, right? You have about a year to sell your property to buy, right? So that created a lot of artificial demand side data that caused a spike in the sales volume. The government wanted to normalize it to make it accurate. So that was why they did that by banning the reissuance of option. But affecting who? Mainly upgraders and mainly developers, right? But have significant impact on the market. That actually caused volumes to taper off quite a bit. Yeah. So number two, for those of you who follow us know that how much we acknowledge that this minimum average unit size requirement has impacted the market. And this is perhaps something very important for those of you who are listening, especially for the first timers and upgraders. This particular point will impact you more so than timing the cooling measures, right? Because all the units that were launched or land that was bought after this measure was announced are limited to an 85 square meter minimum average unit size, right? So what that means is that the units will averagely get bigger, quantums will get bigger, and they'll be more expensive and harder to afford, right? So that is the deadline, right? So as the supply for the launches that was launched or bought before October 2018, those will be absorbed up really, really quickly. Yeah, really, really quickly. So once those are absorbed up, the next batch, larger in size, larger in quantum, harder to afford. Something to think about, right? It's going to impact you more than trying to time the property cooling measures. So where are we today? Yeah, prices have came up 6.5% over the last 4 quarters. We're still a bit off from the previous trigger, if you want to use that previous benchmark with which they introduced the measure of 8.3%, right? 6.5%, so still a bit far off, right? So still got a bit of time. Yeah. But in Q2, I expect the price to still jump up quite a lot, because in this quarter we had a lot of high quantum and high PSF launches like Irwell Hill and one of Eden that are at the close to 2000 PSF mark. So that's going to drive the price index up. So inevitable, yeah. So what is the government going to look at, right? So what will happen? What's the government looking at to determine whether or not they want to implement the cooling measures, right? Number one, not just the price index, right? On top of the property price index, what are they considering? The speed of the increase. So what does that, what do I mean by that, right? So if there's going to be a 2% increase, right, that they are factoring, okay, we are fine with the market going up, let's say 5% over the year, right? But if that 5% come in one quarter, definitely the cooling measure will come. But if that 5% is split up, right, into 1.25, 1.25, 1.25, 1.25, they probably should be okay with that, right? As at least the speed of increase is stretched out. Number three, point number two on interest rates, economic and COVID outlook. I think most of us will know, right? Keeping a lid on interest rates. If interest rates do come up, it will very naturally suck out some demand and suck out some heat from the market, and they don't really need to do a lot of things, right? The fact is that the Singapore government doesn't control interest rates. So, but if the interest rates do organically come up, right, because of the US side, whatnot, they don't need to do anything already. Yeah. Economic and COVID outlook, right? So this and supply, we can look at it hand in hand. So for right, I think the big news nowadays is how India is closing off their borders, and how the government is coming out to say they expect some delay in construction. That's going to impact supply. So the fact is that supply today is running quite low. Yeah, so which is why I drew that analogy of the spring, right? So this spring started like that, right? After circuit breaker, right? Then come low interest rates, right? So then that load up the spring, right? Then pent up demand, yeah, that's loading up the spring some more. Then a low supply, that's loading up the spring even more. So what the government probably do not want is by having some cooling measures and postponing the demand to load up the spring so much that once the spring, there's some reason for the spring to spring back, the prices shoot up so much that no matter what cooling measures they come in, or they have to do very, very significant and draconian, drastic cooling measures to bring the market back. So they are watching this quite closely. Yeah. So, and this next chart is probably the most important chart today. Yeah, there's one significant difference between the 2018 cooling measures and where we are in today's market. The 2018 cooling measures also came about because it was on the uptrend of supply. Right, the developers did a lot of en bloc, right, and the government was scared that, hey, wow, all this supply, can the market take up or not? Right, and the supply is going to come online at 20-25% more expensive than the previous batch. So they were scared, right? And they didn't want the oversupply to spill over too much. So which is why they did the July 18 cooling measures to control the supply as well. Yeah, but today you see the curve. The supply is actually coming downwards, not upwards, right? So the question is, this is one of the reasons why personally we feel the cooling measures may not come just yet. Yeah, it's because there's a delay in construction, supply is going downwards. A cooling measure now, will it really affect the market? Probably not so much, but it may be kicking the can down the road because there's already not going to be supply already, right? And you try to control demand by pushing demand onwards, right? That is like the analogy of loading up the spring. Yeah. So if you ask me, even if cooling measures come today, will the prices drop? Answer is no, because the supply already so little. Simple as that. Yeah. I could end the discussion now, but I have more interesting info to share. Yeah. So what are the potential cooling measures that will come about, right? Very comprehensive list, yeah. Every single one, right? I just going to run through it quite quickly. Tightening TDSR, that's going to affect loan quantums. Who will it hit? I read technically everyone, right? But actually not so. So for those of you who has done your IPA, most of them, right, have no issues with the loan quantum. It is the down payment that is of an issue to a lot of people, right? But this sends out, right, by tweaking this, it sends out a message to the market. It prevents over leveraging. Yeah. So we feel the likelihood of this happening is quite high, right? Does not affect too many people. It doesn't make people suddenly not able to buy house and a lot of unhappiness in the market, but it drives a strong enough point not to over leverage, and it's going to cause enough of a shock in the market to slow down the purchase, right? But not impact too hard, which is why we feel the likelihood is quite high. They could shorten loan tenure. Today is 30 years for private properties. Shorten it to 25. That's going to increase higher repayments. It's going to sort of act, right, like an increase in interest rates. So your repayment now suddenly going to expected to jump by $500. You're going to take a step back and think it through again, right? This is going to affect everyone. Likelihood of this happening, right? I put medium lah, yeah. Lower LTV, right? So that's going to incur higher down payments. Who's it going to affect? Everyone. Likelihood of this happening, I don't think it's that high, because a lower LTV, higher down payments, right, will affect first timers a lot. And I don't think that is a group that the government really want to punish or affect too much with this. But lowering LTV is one of the preferred ways of cooling down the markets. If you analyze real estate markets across Asia lah, we have Korea and we have Hong Kong at 50% LTV, and LTV actually at the end of the day, a lower LTV encourages lesser leverage also, because at 50% LTV you already pay off half the house, right? If property price drop 30%, you are not going to be that affected anyway, right? Raising ABSD, I put that as a very low likelihood, because 12% is already a lot for many people to swallow. So we don't see a lot of people paying that 12%. So by raising it up to 15%, it's going to have a very, very marginal effect on the market. So we don't think that there's a very high likelihood of that happening. And also who will in fact is a very narrow group of buyers. So raising buyers stamp duty. Yeah, so the last time we saw it, they implement the 4% on amounts over $1 million, right? So if you really do look at the data, there's quite a high volume still on the transactions from 1 million to 1.5 to 2 million. I think we shared that data in one of our previous slides. So there's a lot of people buying above 1 million. So what they can do, raising that up on properties above $1 million, maybe above $1.5 million, 1.5 million or above 2 million. So that effectively is sort of a wealth tax lah. So that is why I put medium lah. Low is because very low chance that they will do a across the board increase of stamp duties, because that's going to affect first time buyers also, increasing the cost for first time buyers. Capital gains tax, right? Sort of like a wealth tax, right? Who make money, I'm going to tax it on this. Some chance, right? But still quite low lah, because the impact is very narrow. You see, just investors, right? Increasing seller stamp duty, increasing MOP, that's going to force people to hold their properties for a longer period of time. Increasing SSD, low chance, right? Because same thing, very narrow pool of people that's going to be affected. Increasing MOP, I know that is going to piss a lot of people off, right? But hear me out, right? By forcing HDB owners to stay in their HDB for a longer period of time before upgrade, that may help the government bring in sufficient supply on the private side first, right? Because the HDB upgrader supply is very, very strong over the next couple of years. If you have been following us, right, it's going to average about 20,000 units hitting their MOP every year for the next few years, right? So if there's not enough supply, as we have seen to feed this demand, it's going to cause the prices to shoot up significantly lah. So increasing MOP as draconian as it may sound, logically I feel it makes sense. But I don't know whether the government is going to do it or not lah. So next part, is it worth timing the cooling measures? So what I've done, I've come up with some examples of people that bought before cooling measures and bought after cooling measures. How does that impact them? How does that impact prices? Yeah. Seaside Residences, right, was launched in 2017. So if you remember, 2017 was when prices were on the uptrend already. Yeah. So at the start of the uptrend, right, they launched at close to 1006 to 1008 PSF, which at that point in time was very, very expensive. Yeah. I mean, after all, it's Seaside Residences, albeit as at Siglap, it's still considered the OCR. So that price for OCR at that point in time, very, very high. But it's TOP very, very recently, and you look at the profits that these people have made, right? Don't look at the quantums, right? Maybe you can even look at the annualized returns, and this is non-leveraged annualized returns. 3% to 5% is very, very good. So these guys bought much earlier than cooling measures. Cooling measures came, right? People accepted the cooling measures, then they sold it during a time of undersupply. Hence the kind of profits that they made, right? So then, right, what happened the last round when the government implemented cooling measures, right? Who here remembers what happened? Oh, Arthur, thanks for joining on your birthday. Hi Arthur. Okay. Right, the government instituted cooling measures July 5th, and they say 2359 July 5th. Oh, hi Kit. Right, loyal supporter. Thanks for always joining us, Kit. Okay, yeah, sorry. Back to the topic. Yeah. Last round of cooling measures, right? What happened? Government say by today, old rule. But after 2359, new rule. What happened? The market went nuts. This is a photo of the show flat at Riverfront Residences. Who was there? Who was there on July 5th? I remember being there. The queue was crazy, and when the clock was reaching 12 o'clock, everybody started rushing to the table. It was crazy lah. So what happened to these people, right? Because usually, right, people will say, when everybody is rushing, you try to take a step back. But these guys, what happened? I'm going to quote you an example as Sterling Residences, launched 5th July. You can see the date, cooling measures day, right? It was launched at an average PSF of 1,800 per square feet, right? Today, the most recent sales of Sterling Residences, they were averaging in at 2,100 PSF, yeah? So almost a good 300 PSF increment already since July 2018. So what's the purpose of sharing all these examples, yeah? Later on, I will put that up in the conclusion lah. Basically, it doesn't matter, right? The market has already gotten used to cooling measures, so prices won't really be affected much, even if cooling measures do come in. Yeah. So what should you be doing if you are an investor, an upgrader, or a first-time buyer? Yeah. Okay. So for investors, yeah, ABSD is unlikely to change. So for investors, no real urgency, to be very, very honest, especially if you're sitting a lot of cash. Even if TDSR comes up, LTV comes up, it's not going to affect you by much, But that said, yeah, supply dropping is not going to help you much, right? So if you do wait, it's waiting for more options to come up, but not for prices to drop, right? But for investors, yeah, listen to the end, because later I've got something interesting to share with you about how you can use ABSD to benefit you. Okay, for upgraders, I will watch out for the HDB price trends, which we talked about, I think 1 or 2 Facebook lives back. Yeah, go and watch that video. I think that one is more important for you, the price trends of HDB. Yeah, and then also the supply demand dynamics affecting the HDB market, affecting the private market. That is going to be more important for you as opposed to timing the cooling measures. Okay, for first time buyers, yeah, even lesser effect of cooling measures on you. Yeah, it really wouldn't affect you by much because supply is coming down significantly and quantums are coming up. Waiting too much is actually going to be of detriment to you because the private property prices is going to become increasingly unaffordable for you. Even if prices stay the same, if they do increase the stamp duties that you have to pay, if they drop the LTV, if they drop the TDSI, it's not gonna, maybe unaffordable is not the right word, it's gonna be harder for you to buy your property. So for first time buyers, please don't bother so much about the cooling measures, right? Yeah, you shouldn't be waiting. So in conclusion, yeah, what I want to say, buying on either side of the cooling measures as the examples I've quoted doesn't matter, right? As long as you buy the correct property, as long as you have holding power, and as long as you know when to exit, right? The market is already used to the cooling measure. So even if the cooling measure come, volumes drop significantly, price drops slightly, it's going to recover very, very soon because cooling measures act to shift demand, not destroy them, right? Just shift the demand. Imagine the property market is a TV. They just press the pause button. It's not the delete button. Okay, so and prices will recover eventually, or perhaps prices won't even drop because the supply is coming down so quickly. Instead, focus on spotting fundamentally right properties, right? Properties in areas of strong fundamentals, location, schools, high upgrader demand, things like that. And focus on your affordability, right? So just now that list, what are the potential cooling measures that will come in place, right? Go through them in your own exercise, right? Which one come up, will it affect you? If that TDSR, will it really affect you? Yeah, LTV, will it affect you? If the answer is none of them is going to affect you, then okay lah, you got time. Yeah, but if any of them is going to significantly affect you, meaning if that comes out, you go from can buy to cannot buy, then you have to rework your whole timetable and not focus too much on trying to time when the cooling measure is going to come in. Okay, so now for the bonus, how to make ABSD work in your favor. So Singapore was one of the first countries to implement cooling measures. Yeah, we started in 2013, right? Actually earlier than 2013, right? So ABSD, we are one of the first countries to implement ABSD, additional buyer stamp duty, on foreigners, right? You see, the rest of the countries came online 3 years later, right? After the increase have been after their prices have been shot up a lot, right? So how has this affected the market? So I took this from the PwC Emerging Trends in Real Estate in Asia Pacific 2021. What you notice, right? Singapore used to be very, very sought after 2011, 2012, right? Then our rankings start to drop to 3rd, 7th, 9th, 11th, 21, yeah. And why it start to drop, right? Because we went to implement cooling measures. So from if you are a high net worth individual, if you are fund, you look at the countries on a broad-based perspective, right? Then you get to choose, right, where you want to go. So if Singapore suddenly becomes so much more expensive for you to invest in, you're going to shift your money elsewhere. Hence, this drop in ranking not so favored anymore. But once all the other countries started to implement their own form of stamp duties, ABSD, the money in the end flow back towards Singapore because Singapore fundamentally is a lot safer as a country, as an investment location, right? So this is another way to analyze that data, still driving the same point as the previous chart how Singapore's property price have performed in the last 10 years as compared to other countries, right? Countries like New Zealand, Hong Kong, Malaysia even. I circled Malaysia, not to, put Malaysia down on anything, but, if touch your heart, if you have a choice. Would you rather invest in Malaysia or in Singapore? So for the fact that Malaysia has gone up 80% from 2011 versus Singapore only 7%, which one makes more sense? Yeah. And this fact that all the hot money is shifting away from Singapore, right, has coincided with the underperformance of the CCR. You notice the CCR have only came up 13% from 2013, right, losing out significantly as compared to the RCR and the OCR, right. You can see why. But it's poised for a comeback, right? This was an article from Business Times just yesterday. The CCI is seeing a huge pickup in transactions, in buyers. We see so many large quantum purchases, right? Hilltop's penthouse 33.5 million. We saw the case of the Wang Wang boss buying the whole condo for 200 over million at 4,000 per square feet. So it's poised for a comeback. The high net worth and the funds, they are looking for stability. So this snippet, same thing, took it out from the PwC report, right? So what it says, right, is that the Chinese pension funds and insurance company, they are looking to buy property, but they are looking to buy high quality assets, and they don't really care where it is, right? They also say Singapore has benefited a lot from the uncertainties from the Hong Kong market. Yeah. So how to make cooling measures work in your favor? You will want to pick up if you are Singaporean, and even if you're paying 12%, right, or you're a PR first timer paying 5%, you want to look out for condos with this kind of buyer profile, where the majority are taken up by foreigners, right? 58% foreigners. These guys are paying 25% ABSD. So even if you are paying 12%, you're still 13% cheaper than them, right? So this is how you can make it work. Choose where you invest in, right? Invest in areas where the majority of the buyers are paying a lot more than you, right? So you're only paying 12%, 5%, so what, right? The rest of them paying 25%. So I've compiled a list of properties that have this kind of characteristics with people that's paying a lot more ABSD. So drop me a text if you want that list, yeah, at my number over here, or Elizabeth's number, right? So that is what I have for everyone today. It's a pity we don't have as many people as we used to, but still got 11, not bad, right? I was thinking maybe nobody join us. So thank you so much for joining us. Thanks, Kit, Arthur, right? Yeah, Eugene, Eunice. Any questions for me before I go? Wow, today's session quite intensive, quite long. Yeah, any questions? I'm gonna be here for the next 30 seconds. If anybody has any questions. I'm gonna go back to my slide on potential cooling measures and leave it at this slide lah. Oh, hi Gabriel. Hi YK. Thanks for joining. Hope it was useful. So any questions? Yeah, I very scared to leave because every time I leave, right, then immediately questions start to come in. Then I feel so bad for not answering those questions. Okay, so if there's no other questions, I'll see you guys next month. And yeah, if there's a particular topic I haven't talked about what I want to talk about yet lah. So if you all have some things that you want me to talk about, right, drop me a text also, right? I go and prepare and I share with you guys. So till next month, thank you so much. Bye bye.